Hi everyone! Today, we will learn about the taxability of income earned by small businesses. Before we proceed with the discussion on how they are taxed, let us first define what are considered as small businesses in the country. The following are some examples of small businesses: food cart, bake shop, water filling station, drugstore, laundry shop, engineering firm, legal and notarial services, poultry and animal raising business. Under the Magna Carta for micro, small and medium enterprises, MSMEs are defined as any activity or enterprise engaged in the industry, agribusiness and/or services, whether single proprietorship, cooperative, partnership or corporation, whose total assets must have value falling under the following categories. For a micro enterprise, it must not be more than 3 million pesos. For a small enterprise, more than 3 million pesos to 15 million pesos. And for medium enterprise, more than 15 million pesos up to 100 million pesos. Under Section 5 of Republic Act No. 10963 or the Train Law, small businesses are those self-employed individuals whose gross sales or receipts are more than 250,000 pesos but do not exceed 3 million pesos. What are the components of gross sales or receipts of small businesses? This may include the following items: the price paid by customers for the purchase of goods in a sari-sari store or for purchasing bread from a bake shop. For services, it may include the haircut fee paid to a barber. Thus, gross sales or receipts are the money customers pay in the normal course of business. Under the Corporate Recovery and Tax Incentives for Enterprises Act or the CREATE Law, small businesses are those corporations with net taxable income of 5 million pesos and below. So what are the components of the net taxable income of a small business? Following the basic formula, the net taxable income of a small business is the gross sales or receipts less cost of sales or services plus other income less allowable deductions. Hence, aside from the gross sales or receipts, a small business may also earn the following. To reconcile these laws, let us summarize their provisions. Under the Magna Carta for MSMEs, small businesses are those with assets amounting to more than 3 million pesos to 15 million pesos. Under the Train Law, small businesses are those with gross sales or receipts that are more than 250,000 pesos but do not exceed 3 million pesos, and this applies to self-employed individuals. And under the CREATE Law, small businesses are those that have net taxable income of 5 million and below, and this applies to corporations.
By virtue of the laws, there is an imposition of tax on the income of small businesses. Small business can be imposed with income tax and business tax. Let us compare by referring to the table. To simplify, income tax is imposed on income realized, while business tax is levied on the business activities. We now discuss the concept of withholding tax. Withholding tax is simply an advance payment of tax by the taxpayer. Under withholding tax, there is what we call expanded withholding tax. This is a kind of withholding tax which is prescribed on a certain income payment and is creditable against the income tax due of the payer for the taxable income earned on a quarterly or yearly basis. The deductions in reference to income earned by small business is subject to kinds of allowable deductions. Under the law, there are two kinds of allowable deductions: the optional standard deduction and the itemized deduction. Optional standard deduction is a standard deduction of an amount not exceeding 40% of gross sales or receipts for individuals or in gross income for corporations as the case may be. Also, this is in lieu of the itemized deduction. This optional standard deduction gives the taxpayer a choice for computing the tax-deductible expenses either at 40% of gross sales or receipts if the taxpayer is an individual, or in gross income if the taxpayer is a corporation. I repeat, this is in lieu of the itemizing expenses to be claimed as tax deductions. Furthermore, an individual who opts to avail this deduction need not to submit the account information return or financial statements. To benefit from this tax savings under the optional standard deduction, a taxpayer must have a net profit margin of more than 60% after applying the allowable deductions and considering the imposable taxes. Hence, taxpayers with smaller profit margins, usually those engaged in trading or manufacturing, will not choose optional standard deduction. Now let's discuss the tax rules when claiming itemized deductions. Itemized deductions are specific expenditures enumerated under Section 34A to J of the National Internal Revenue Code, and these expenditures can be deducted from the gross income. In order for these deductions to be considered as allowable deductions, they must be duly substantiated with official receipts and other supporting documents. Truly, all requisites of deductibility must be present. The following are the itemized deductions as shown on your screen. After discussing the different taxes imposable on small businesses, we are now ready to answer the question, how is their income taxed and what are the applicable taxes to them? Let us go back to this table. Upon looking at this table, small businesses can either be taxed as corporations or as self-employed individuals. Under the train law, individual taxpayers earning 3 million and below are considered small businesses. And if the total gross sales or receipts of the small business do not exceed the VAT threshold of 3 million, the small business owner may opt to avail either 8% income tax on gross sales or receipts and other non-operating income in lieu of the graduated income tax rates and the percentage tax, or income tax based on graduated income tax rates. Note that to be qualified to avail this first option, the following requisites must be present. First, the taxpayer must be an individual taxpayer. Second, its gross sales or receipts and other non-operating income did not exceed the 3 million VAT threshold during that year. Third, the taxpayer is subject only to a percentage tax under Section 116 of the National Internal Revenue Code. And fourth, that the taxpayer signifies his intention to elect the 8% income tax rate. To signify the intention to avail the 8% income tax rate, the existing individual business taxpayers must file to the BIR Form 1905 at the beginning of the taxable year or upon filing of first quarterly percentage tax and or upon filing of first quarterly income tax return. Then, the income tax rate option, once selected, shall be irrevocable, and no amendments of option shall be made for the taxable year it has been made. This rule is applicable for sole proprietors or solo business owners. In the Philippines, solo business owners can be the owner of a business engaged in providing services, such as salons or spas, or those engaged in the sale of goods, either as wholesalers or retailers. Under the Credit Law, small businesses with net taxable income of 5 million and below are taxed as corporations and granted a lower corporate income tax of 20%. Small businesses who are currently managed under the sole proprietorship may enjoy the lower taxes if they opt to organize as a regular corporation.
Let us now look into the administrative requirements in order to be qualified or registered as a small business under the law. Appearing on your screen is a quick overview of the necessary documents. For us to be properly guided, we might as well consider the following processes and other consideration. First off, figuring out the business structure. If the business is a sole proprietorship, file the business name with the Department of Trade and Industry. If the business is a partnership or corporation, file the business name with the Securities and Exchange Commission. Lastly, if the business is a cooperative, file the business name with the Cooperative Development Authority. The next step in our process is capitalization. If the business is a corporation under the Philippine Corporation Code, the minimum amount is 5,000 pesos. Depending on the bank, additional documents like articles of incorporation and identification documents are needed. However, if the business is a sole proprietorship, filing with the Department of Trade and Industry would enable the business owner to use the business name if it is still available. Likewise, it enables them to own the business name as a trademark. After filling up the business application form of the DTI, submit the same to the DTI and wait to be issued a certificate of registration. The next step is to register with the BIR. Upon registration with the BIR, the business owner may pay taxes accordingly, then fill out the corresponding forms as shown on our screen. If the small business is a sole proprietorship, they should accomplish 2 original copies of BIR Form 1901. If the small business is considered as corporation, partnership, and cooperative, accomplish 2 original copies of Form 1903. We're almost finished. Our next consideration would be the payment of fees as shown within your screen. After that, we may proceed to receive the certificate of registration and along with it, the authority to print and ask for receipt notice after the approval of the certificate. And finally, we may file with the Securities and Exchange Commission. In addition to these administrative requirements, small businesses must also comply with the payment of income tax by filing the following forms as may be shown within your screen.
That ends our discussion for today. Thank you for listening.